we will need to get a word from you on offshore investing. A lot of investors did that, and we've also been talking about that. Very useful for diversification. But end of the day, they are also equity asset classes. They will go through their cycles. So how are you kind of just...
See, we've been focusing a lot more on EMs. And EMs, as we know, in a lot of the Asian...
So EMs as in a diversified set, not necessarily AI. It is a larger EM basket.
Diversified emerging market. But as we know, with what has happened in Korea and Taiwan, because of the very sharp movements in their market cap, both the markets over there are larger than India right now. Right? So I think, so therefore, it has meant a very disproportionate weighting in most global portfolios as well. So I think that's where there is a certain amount of concern that's crept in. Honestly, I think a lot of it is to do with the Korean market, where there has been so much of leverage.
Clearly.
We all read about it and stuff like that. I think that leverage is kind of popping in a very ugly kind of a manner. A very, very disruptive and ugly manner it's coming off. So I think somewhere it will find some stability in the next maybe 1-2 months.
Some settling of that.
Some settling, some stability as the leverage flushes out of the system. See what happened to gold.
In January of this year,
you saw gold go up to 5,400, I think, dollars, and now you are at 4,000 or so. So you saw significant deleveraging over there, or even in silver for that matter. So the deleveraging period can be gut-wrenching and painful, but if the underlying asset has value, then I think it's not going to be all the way crashing down to...
Clearly, from an earnings perspective, those markets
still have some legs, because even now I think they're talking about we saw SK Hynix at
I remember
557% growth, and Samsung talking about some crazy number.
So earnings growth are there.
These companies are posting earnings which is higher than the cumulative earnings of the Nifty companies. So I think they're monstrous in size, and they're growing also reasonably well. So at least for the next 15-18 months, there is visibility of earnings growth over there. So I think that probably is not a complete bubble market where out of thin air things are happening. There is a certain amount of earnings growth, free cash flows, and all of those solid fundamentals in place. So I think existing investors who are there, I think, should just ride this out. But for new ones, probably wait for a little bit of
some stability,
sensibility, some bit of stability to come in over here.